Good morning, everyone, this fine Monday morning. Welcome to our weekly briefings with me, Geoffrey Shanga, educator, market analyst at Scope Markets Kenya. So our weekly briefing entails the last week's market view, market reactions. We have the upcoming key events for the week to watch out for, that is on this week, and also the trading implications that it has on the various currencies and various asset classes that we are going to look out for. So welcome aboard and work with me. So as we start off, we're going to start off with what happened last week. So last week's data and releases. We had the Reserve Bank of Australia releasing their interest rate statement. We have the Reserve Bank of New Zealand as well releasing their interest rate statement. We have the dollar FOMC meeting minutes that happened also last week. We also had the US unemployment claims get a policy rate at 3.85% in its latest meeting, which was last week. So the officials stated that they required additional time to assess incoming inflation data to confirm that consumer prices are sustainably aligning with the 2.5% inflation target. So a quote from the Reserve Bank of Australia, they mentioned that a little more information is needed to confirm that inflation remains on track to reach 2.5% on a sustainable basis. So the expectations versus the reality. So there was a forecast of a rate cut of 25 basis points, but the policy rate remained unchanged. So inflation data highlights. The May inflation was 2.1%, which was the lowest since October 2024. Then the first quarter inflation was 2.4%, which was a 4-year low. Then you had the June CPI, still for the AUD, slightly stronger than anticipated, but broadly consistent with the Reserve Bank of Australia forecasts. So the interpretation is that while disinflation continues, marginally firmer price data has given the Reserve Bank of Australia reason for caution before easing the rates. Okay. Then next we get into the Reserve Bank of New Zealand. The Reserve Bank of New Zealand, the Monetary Policy Committee voted to maintain the rates at 5%. The outlook, short term, consumer inflation is likely to rise towards the upper end of 1 to 3% target band by mid-2025. The medium term expected to moderate back to about 2% by early 2026, supported by spare productive capacity and easing domestic pressures. So the growth and risk factors you are observing. So positive drivers, elevated export prices and lower borrowing costs, supporting recovery. The negative risks, we have global policy uncertainty. So it's heightened due to inflation. It's heightened due to international tariffs and slower global growth, the potential drag on New Zealand's economy. So policy guidance, if medium-term inflation pressures continue to decline, the Reserve Bank of New Zealand indicated it expects to lower rates further. Okay. Then we also had the U.S. Federal Reserve, where we had the FOMC minutes. So the Federal Open Market Committee held the federal funds rate at 4.5%, so which has been unchanged since December 2024. The committee divergence, so most participants support for some cuts this year, viewing tariff-induced inflation as temporary and modest. Then others have a preference for maintaining rates through year-end, citing resilient economic activity and inflation still above the 2% target. Now, the inflation and employment data. So how does this relate and what are we able to gather from that? The May CPI, we had a positive of 0.1% month on month. The job market, the non-farm payrolls for the previous month, we had an additional 147,000 jobs versus the 110,000 which was forecasted. The unemployment rate fell to 4.1%. So the economic risks that we are looking at, we have consumer spending. So weakness is evident with personal expenditures down to 0.1% and retail sales falling 0.9% in May. So the tariff impact, we have extensive tariff announcements on 14 countries, which I'm going to mention. Then we have potential trade friction, rising uncertainty. Then the Fed's forward guidance. So participants agreed that although uncertainty about inflation and the economic outlook had decreased, it remained appropriate to take a careful approach in adjusting monetary policy. So that was the information from the FOMC meeting minutes that we had last week. Then a closer look into the US tariff developments. So we have had President Donald Trump talk about tariffs last week, and we had the new blanket tariffs that had been announced on various countries. So President Trump unveiled significant tariffs to address trade deficits. So we have 14 countries that he mentioned about, that you're going to look at a comparison between these countries. So President Trump unveiled significant tariffs to address trade deficits. We have 14 countries that he actively mentioned on, and I'm going to do a comparison between what was mentioned and what was mentioned now on July 7th to 9th. And these tariffs are supposed to start on the 1st of August. So starting off with Laos. So starting off with Laos, we had 40%, 40% in July. In April, that was 48%. So that is a difference of 8%. We have Myanmar, which was 40%, and in April 2nd was 44%, a difference of 4%. Then you have Cambodia, 36%, release was 36% in July, and in April we had, then for Thailand we had 36%, so for Thailand remained unchanged. Then we have Bangladesh, came out at 35% in July, and 37%, a difference of a drop of 2%. For Serbia, we have July, we have the release was 35%. Then in April was 37%. There's a difference of percent. Then Indonesia remained the same percent, both the and previous one in April, so it remained unchanged. We had Algeria as well. Algeria had a tariff of 30%, still remaining the same, unchanged from the previous April 2nd 30%. Then you had Bosnia as well. Bosnia has a tariff rate of 30%, which was dropped from the previous 35% in April. Then you have Iraq getting a 30% tariff from the previous April 2nd 39%, so that's a drop of about 9%. Then we have Libya. So Libya had 30% from the previous April 2nd, that is 31%, so a drop of 1%. Then you saw Sri Lanka. Sri Lanka got 30% from the previous April 2nd, 44%, so a drop of 14%. Then we saw South Africa as well. South Africa got a tariff of 30%. That still remains unchanged from the previous April 2nd tariff release. So they have their tariff rate has remained unchanged at 30%. Then you have Brunei. The latest release was 25% from the previous April 2nd, 24%, so a drop of 1%. Then we've had Japan, Japan getting 25% tariff from the previous 24%, so that is an increase of 1%. Then you have Kazakhstan, getting 25%. From the previous April 2nd, we had 27%, so that is a drop of 2%. Then Malaysia getting 25% from the previous 24%, so an increase of 1%. Then Moldova getting 25% from a previous 31%, so a decrease of about 6%. And then you have South Korea getting 25%, which remains unchanged from the previous rates that they had on April 2nd, which is 25%. Tunisia getting 25% from the previous 28% tariff on April 2nd, so theirs has gotten a drop of 3%. Then Philippines had 20% tariff from the latest release last week. From the previous April tariffs was about 17%, so they have had an increase of 3%. So these tariffs are meant to start from the 1st of August, as I mentioned. So let's observe and see how it will react to the various countries and the kind of impact that we will be getting on their various currencies. Then coming into sectoral tariffs, we do have coming into sectoral tariff, copper tariff announced. So there's 50% tariffs on all copper imports, and this is effective on the 1st of August 2025. So the justification, the National Security Assessment identifying copper as critical for defense and technology. So alignment with tariffs on steel and aluminium. So the market impact it has. Copper prices. So copper prices, we have seen 13.12% increase in one day. This is the largest single day gain since 1989 on the prices of copper. So then we also have an additional 2.62% after the announcement happened. So benchmark futures on the US, we saw $15,000 per metric ton. That is projected, and a global $10,000. Again, that is also projected. So the quote from the US Commerce Secretary. So this move brings copper tariffs in line with strategic metals and encourages domestic production. Okay. Then you also have the US Treasury yields amid all these trade tariff drama. So as of July 11, 2025, we have the maturity yield change in basis points. So the 1 month, we have the 1 month yield 4.321%. So there was a change of positive 0.3. Then you have the 3-month yield giving 4.364%. So a change of positive 0.6. Then we have the 6-month yield getting a 4.280%. So a change of about positive 0.6. Then we have the 1 year yield comes at 4.084%, a positive of 1.2 basis points. Then you have the 2-year yield giving 3.889%, a positive of 2.1 basis points. Then you have the 10-year yield giving 4.389%, a positive of 4.3 basis points. Then you have the 30-year yield giving 4.916%, which is a positive of 5.4 basis points. Now the drivers we do have are the trade policy uncertainty. So there's a lot of trade policy uncertainty, especially during this time we do having the tariffs. Then the copper and tariff announcements as well are some of the key drivers. Then also the anticipation of the June inflation data. Okay, so these are some of the key drivers that are pushing this. Now, the key takeaways that we have, Australia and New Zealand central banks are holding their rates with cautious bias towards easing if inflation stays contained. Then the U.S. Federal Reserve remains split with data-dependent policy likely through year end. Then you have tariffs and trade policy are emerging as major sources of volatility across commodities, currencies, and bond markets. Then copper prices and treasury yields have surged, signaling market stress. So having understood all these factors now, what are we looking out for into the coming week? We have some very key events to watch out for. This week we are looking out for the Canadian CPI that is supposed to be happening on Tuesday. We also have the USD CPI also happening the same day on Tuesday. So these are inflationary measures that you're going to be observing. Then we do have the pound, the CPI happening on Wednesday. Then we also have the USD PPI happening on Wednesday. Then you have the Australian unemployment change happening on Thursday, and the USD retail sales happening on Thursday as well. So this week we do have quite a lot of inflationary news that are coming out, and it's something that you're going to be watching out for across the various currencies that will be affected. Then also we have major events to look out for. We have the July 29th and 30th FOMC meeting. So we have potential rate cuts, but then again, we have to wait until that time to be able to observe if we either get a rate cut or the rates will remain the same. Then August 1st, we will be having the starting of the US tariffs on the 14 countries we mentioned, and also the tariffs on copper imports. That is the 50% tariffs on copper imports. Then we also have early August, we will be looking out for Australia and New Zealand policy updates. And then mid-August, we will be looking out for the US inflation and labor market data. So with that, I would like to invite anyone with questions, or if you have questions, feel free to drop them. And in case of no questions, I would like to come to the conclusion of this session. So thank you everyone for joining in, and looking forward to seeing you.